Hey everyone, hopefully you're having a great day. My name's Andy, my channel's Finding Value. If you like making money, subscribe to the channel, give me a thumbs up, leave comments below if you guys have any questions or comments. I'm going to go over a ratio update here. Ratios tell us value, they also tell us trends. Is it an uptrend, downtrend? What are assets doing against each other? And those trends can tell us things about the market and underperformance or outperformance of what's going to happen next. So let's look at the ratio of a lot of things and see what they're doing. So this is what determines what assets are cheap relative to each other. We are looking for undervalued assets relative to history. That's what we want to be invested in. Ratios also tell us what trends assets are doing real time against each other. Is it outperforming or underperforming? And those trends can tell us where we should be over time. So let's look at the charts and the ratios to see what's going on. And again, some of these are my opinions. This is the Dow to gold ratio, and it's trending up, saying that the Dow is outperforming gold. And right now we've got this throw over top deal where I think it may come up and then I think it's going to come lower. We do have a bearish engulfing here. And we have dark cloud cover right here. So it's kind of fighting its way up, and I think it's going to come back down at some point. It may take 4, 5, 6 months, but I do think it will. This ratio will compress and go down, meaning that gold is going to outperform stocks. And why do I think that? I think that because of market conditions. I think that real estate is going to go into an expansion phase. We're going to have inflation from that real estate going into an expansion phase. Also from money printing from the government. They're printing a lot of money, and it's getting into the hands of people through stimulus. And eventually, stocks do not like higher interest rates because inflation spurs higher interest rates, and the rotation of money will rotate into precious metals and commodities and away from stocks. This is the CRB, commodity to Dow ratio. Commodities broke out to the upside against stocks or the Dow. This is another reason why I think precious metals and gold will outperform the Dow, is because commodities are outperforming stocks. We just are seeing this bottom put in place. It broke the downtrend line there, and I think it has a long way to run to the upside. This is the gold to copper ratio, and you can see the trend line breaking to the downside. This was extremely cheap up here, extremely cheap for copper. Now copper's outperforming gold, which is signaling that we have a strong economy, not a weak economy. Or we have shortages in copper, either one. But usually, when the demand for copper goes up, the economy is recovering, usually. Same with platinum. When platinum outperforms gold, it means that commodities are the spot to be and that you want to dump your stocks. The platinum to gold ratio, or gold to platinum ratio, however you want to say it, when this ratio does this, it means that stocks are going to underperform. At least that's what the articles all say in the books. Gold to oil ratio, and you can see that oil broke to the downside. Oil is outperforming gold. We were at some ridiculous levels up here, around 140, which has never been this cheap, not even close, which also makes me think that we're going to have problems with supply in the future because of this low price of oil. But oil is outperforming gold. It is another indication that inflation is here and that we are having a commodity bull market coming. This is the gold or oil to natural gas ratio. It looks like it's going to break to the upside, which means oil is outperforming natural gas. This does make sense as natural gas kind of weakens during the summer months. And then during the summer, that's kind of when you want to buy your natural gas. We've got gold to silver ratio. Silver's outperforming gold. We're at a 66.8. It broke this trend line, signaling a commodity bull market could potentially be underway. This is the gold to NASDAQ ratio. This thing is low. I mean low. I think this is going to reverse and go all the way back, probably up to the 2011 area at some point. which means you're going to have an 8x increase, 7x increase to get up there. So I think gold's going to outperform the NASDAQ. So think gold up, NASDAQ down. Now, so I was reading some comments. I know Rich had put in there that I should watch the dollar milkshake theory. I already watched that a long time ago. I don't agree with it. I don't agree with Stephen Van Meter either. And the reason, my take lies completely on the thesis of I think real estate's going to go higher. I think it has to go higher. I think we have to build at least 4 million more homes out there. And that 4 million homes has to come at some point. Doesn't matter the short-term foreclosures. Does not matter. The demographics supports more homes. Whether we build it this year or 2 or 3 years from now, it has to be built at some point. That's my take. And if we build those, it's going to be inflationary because real estate goes up. In history, every time real estate goes up, we have inflation, which then means higher interest rates, which then means a rotation of money. That means Japan and these other countries in Europe have declining populations. They have deflation because of declining populations. We have the millennials coming up, which is a little bit larger demographic, which is going to be inflationary. That's my take on it. And if you're looking for investments based off of demographics, which I think you're supposed to be doing, that's my opinion, emerging markets is a good spot to be because we're going to have a weakening dollar and we're going to have emerging markets are going to benefit from that weakening dollar, and a lot of them are commodity-based, economy-based, commodity-based countries. So they produce a lot of commodities into the system. Another thing that I look at is, with this thesis, I verify it with data. Real estate is going up. We have record low inventory. We have very, very low days on the market. It's all supporting that we're going into an expansion phase. Then the next step that you look at is you look at yields. Yields are going up. Why are they going up? Because we have inflation, period. The deflationists are wrong at this point. At this point. The data says we have inflation. So we have inflation, we have commodities going up, we have yields going up, we have bonds going down. All of the things that they're saying, they are wrong on at this point. All of the data that I look at, all the ratios, platinum's outperforming gold, copper's outperforming gold. That's all commodity inflation. Oil's going up. Inflation. It's not going up strictly because of supply and demand, even though there's a component in there because of that. I don't think you can have every single metric that I'm just describing here go in the favor of inflation, at least at this current time, and have it be wrong. You're basically saying the entire market is wrong. And why are we doing QE? They're trying to hold interest rates down. Well, why are they trying to hold interest rates down? Why do interest rates want to go up? Because of inflation. Well, why do we have inflation? It's this circular loop. We have inflation because real estate's going up. We're entering an expansion phase, and they're printing money and just flinging it out to everybody. So it's two things. And whether they think Japan is in deflation, but it's their demographics. They have a declining real estate market. It's been declining for a very long time. Go look. So I don't necessarily agree with their viewpoint. I have to see it. I have to see this data change. And when I see it change, I will change my viewpoint. But right now, everything's still intact. Big chart patterns are all broken to the wrong side for them, to the right side for us. And I have to see that change. I got to see real estate turn around. I got to see these things go in the opposite direction for me. And we have time. These things will happen and we can see it. Now, there is one risk that the Federal Reserve is purposefully trying to manipulate a lot of these things, is purposefully printing more money, getting inflation out there, and then they're going to rotate it all on us and say, nope, we're going to let the interest rates rise way up, we're going to cut all the money, we're going to do all this stuff, and then they could cause a deflation. But we should see it in this data. We should see bonds go up. We should see interest rates go down where people run into bonds. We should see that. And we saw that last crash. So I'm looking at that stuff. I'll share it on this channel. If you guys are interested in those updates, which I do all the time, like these updates, subscribe to the channel. Give me a thumbs up for the content. Leave comments below on what you guys think. Do you think we're going to have a crash here? Why do you think we're going to have a crash? Let me know in the comment section. Thanks for listening. This is Finding Value.